Yo, yo, how's it going, all you devils out there? Oh, we got last day of May here. Oh, we're going to get into it. We'll look at, let's see, I've got teed up his Bitcoin ETH. Oh, quick peek at total 2, and then a few alts. Oh, I had a couple of guys on my team suggesting we take a look at some of the on-chain metrics and use that perhaps for a bit of a filter on some projects we're going to look at. So we'll dig into that as well. Before we do, just very quickly, I don't pimp our stuff a lot here, so bear with me. We do have this little Memorial Day holiday special going on. We're going to run this through the weekend. So everything's pretty much on sale for 50% off. Into each individual belts, right? If you want to buy them. One thing just to make note of, the brown belt is the only belt that we allow people to buy without having gone through blue and purple, because it's kind of a standalone belt. And with just a basic knowledge of Elliott Wave structure is all you need to get some benefit from that course. This is probably the best deal, right? You get the full bundle for half off. Pretty good deal. Also, the pro monthly membership, that's on that's about half off, and then you could do that by the year, right? So we have a number of people taking advantage of that, which we're always encouraged to see that. Of course, you can always just join us for free, right? We can get right into the white belt. So that'll run through the end of the weekend, just so you're aware. Right? If you want to save some money, good way to do it. Okay, there's my promo for the. I don't do it very often, but there it is. Okay, let's get back over here to total 2, and let's start with Bitcoin, of course. Triangle gonna hold? Well, it's a little shaky there. Oh, now we've looked at this, right? And I think where were we? Right about here last Friday. So we haven't made a lot of progress. Sitting right just underneath the well, essentially now we're underneath the POC, but coming right back to it. So as I said last week, do you have an edge here? Well, I'd want to see that. Now, if you're looking at considering a triangle here, now an overthrow in the E, it's acceptable, but we don't want it to be too dramatic, or we're gonna have to rethink this. The 3, 3, 3, 3, 3. We're holding on here. It's tenuous, right? I don't know that I would make a trade-off of that. I'd want, personally, again, I'm not giving advice. Just for me, I'd want to see this come up here, at least sweep that high, and then maybe start here, then a little retrace. Then I think you could go buying now. Well, why? What's the rationale there? It's an unclear pattern. I'd love to give you trades if they're there. But what I don't want to be doing is, creating trades that aren't there, or just for because there's pressure to create trade opportunities, right? Could we do it this way? Maybe. We'll push it out here. Now, the time, we got to be mindful of that. We could have some imbalance here. Maybe we can get back in here. We can get back in this triangle, right? So the D holds, right? But that would suggest the E is going to be essentially about where we are. If we're going to stay in this triangle formation. Remains to be seen. Again, what's your edge there? That you want it to go higher? I'm not sure I'd call that an edge. It's a bias, right? I mean, I'm certainly bullishly biased, right? I make no bones about that. It's going to have to show me a little bit more before that gets my attention for any additional adding. So I think that's a hold your powder. Let's get over to ETH, because that looks much better. Oh, let's see what I've got here. Let me just zoom in here. So it's a pretty decent looking structure here. 1, 2, very good looking 3. This gets a little squirrely here. Triangle. It's hard to call it, right? So you have this big wick. So you take that out, it looks a little bit better. But some sort of a liquidation wick here, stops run. Or the imbalance here mitigated. Yeah. The structure here would suggest right down here would be ideal. Maybe you see a sweep of those lows again. As you see right here, you might see something like that for a liquidity grab. Oh, here we got some liquidity. Potentially you've got liquidity down here and some inducement as we sweep that, right? That would lock in some of these highs. If you had a break of this low, because that's the low that led to the break of structure up here, although it's very slight, that is a break of structure. Now we've got all these imbalances below. Market's not obligated to go down here and rebalance them, although you can understand if it does, why it does. You're kind of in your prime zone here. Here's your ideal location for a wave 4. So this might need a little bit of a little more kick here to bring it down, something along those lines. That's what I'd be looking for. Now, of course, what we're looking for, it's not always what we get. But there's no, I don't believe we have any pressure. So I got to get in before XYZ. ETH has pretty much had most of those events, those market moving events. We have the ETFs now. So it's okay. I mean, there's some residual issues to be clarified here, but I don't see anything that says, oh, I better get it now. Yeah. I'm not saying don't buy it. I'm just saying if you buy it, right, have a clear exit in mind. Right? So I mean, it's so tempting to just go, oh well, let's take a shot at it. Do the math, right? If you're going to use this as a stop out here below the 38, outside of this channel, don't be lazy about it. Do the math on it and see, okay, what can if you want to go long here, what can I afford to put at risk? Am I comfortable with that? I mean, even if we're just sitting here. Oh shit! Here, come here. Where are you? Long, something like that. I wouldn't give it a whole lot of room there. Why, right? You can always just take the small loser and reload here. If you get a little spike down, something like that. Well, maybe you get 7 to 1. Well, let's not just be random about it. Let's be precise about it. Let's at least use an Elliott metric, right? So if we did something, let's just go ahead and use that. We'll use the proposed entry line. Okay, well, 1 would be a very kind of a stubby 5, right? So I consider 127, 138 also very common. So that's 5.5 to 1. Get you right to the center line here of the channel. Get that 5 in. Now, if we do that, right, you have to ask yourself, where are we? Is that the 5th of the entire impulse? It certainly could be. Or right, for the uber bulls, right, for the bull porn, one of 5, looking for 3, right, much higher. It's tempting, right, to just go, oh yeah, well of course it's going much higher. Not so fast, right? Let's not be pigs, right? The old saying, pigs get slaughtered. Depending on what your objective is here, if you're just looking for a decent entry, well, ideally, right, you get a little bit of a retrace there and you get a better one. But is it something you're going to hold? Well, is it something you're looking to hold for, what's your time frame? A month, a year, 5 years? All those have to get factored in. So be clear in your mind as to what you're doing. Are you buying here to hold for the next 2 years, 3 years, more? Or are you just looking for a single, to hit a single, get that 5, watch the market react? Well, of course, what if we do it? If we break this, what would that be? That will be a break of structure higher. What do we anticipate? Now, we can go higher, but what do we anticipate, right? Anticipate. What does the market demonstrate that it will do the vast majority of the time after a break of structure? Retrace, right? Refuel. Got to grab some liquidity, right? If we're at all-time highs, who's selling, right? If we want to buy it, got to be a seller. Well, okay, sure, market makers. You have to be on the other side of it here, and you might get some aggressive bears. But the reason the market goes down is because they need fuel. Where's the fuel? Underneath the market. That's where they run the stops, and then they go. Okay, so again, what's your time frame? Let's take a quick peek at total 2, because this is where we have this perhaps. Oh shit, where'd you go? Mixed messages. Let's come over here. Total 2. This is, leaves you a little bit. Oh, wait a second. Is that triangle coming back in? Perhaps it's a bigger triangle. Oh shit, do I have it in here? I don't know that I do, but we're here, so let's just draw it up. I thought I did. I might have it in another chart. 3, 3. Right now, if this kicks, we can't. It's a snapshot in time. Right now, 3, 3. Now, if we kick up here and get a 5, different story. But don't fill it in. Don't fill in the blanks, right? Oh, well, of course it's going to do a 5. That seems to be the general opinion across the crypto sphere, is that alt season is, if it's not underway, it's certainly revving, right? Ready to go. Careful about that assumption. Right? It's very easy to do. It's very easy to just fill that in your mind's eye and say, oh, well, of course, we're going to get an impulse. Well, we don't have it yet. All right? Let it show itself, because this is very, very real, right? And it would be a 1, 2, 3, 4. I'd probably change that color just to make the distinction, right? 1, 2, completed impulse here. Triangle 4. Now, we're not trading total 2. We're just using it kind of as a guideline, right? And ETH will probably be the closest thing to it. As we look here, probably the closest, right? But it's not drop dead, right? So you see here, is this going to kick for that 5th? Because we could have a WX going here. This could be 3, 3. Something else going on. Careful about assumptions, right? That's how you get yourself in trouble. Okay. So I think I got everybody there. It'll probably be a quick one today. Of course, when I say that, I'll probably go for an hour now. This is a service that I've mentioned many times before. I use this on a regular basis. This is altFINS. I think they do a really nice job, not only with education, technicals, sorting, screeners. This is just a very, many of you may have been exposed to this, just an excellent service. It's not free, but it's not extremely unreasonable based on what you get for the dollars involved. If I just say it, everybody else says it. If you wanted to support the channel, you could use our link right underneath in our link tree, and it'd be nice, right? We get a little kicker from that. So just so that you're aware. So what do we have here? So I've just gone to their on-chain data, and you kind of say, okay, well, total revenue. Well, not a bad place to start. ETH leading, TRX, Uni, Bitcoin's down here, Solana. Right? You can kind of see it. So you look at that and say, okay, well, which of these protocols is making money? Here's the protocol revenue, total revenue, protocol revenue. ETH leading all of these. Down here, total locked value is kind of interesting, and this is just the higher the value here, the more conviction there is in the protocol. In this case, so here, if you're not sure, right, you can always come here and go, oh, total locked value. What does that mean? Total value locked represents all the assets currently being staked in the specific protocol. The higher the TVL, the more confidence people have in the project, presumably because it generates some value to the users. Okay, well, that seems pretty reasonable. All right, so we're gonna certainly take a look at LDO. Well, this is we got Uniswap and Cake down here. I didn't particularly like what their charts didn't look particularly good. Sorry, so if I might see something here, but if I don't see a chart pattern that I can work with that I like, I'll keep moving. So we're going to look at some of these. The one that was consistent throughout almost every one of these was the graph. You'll see it here in protocol revenue, market cap, divided by protocol revenue, total value locked. Oh, it wasn't here, but it was in, I think, 4 or 5 of these in terms of making money and producing revenue. So let's go over and look at that. Well, we can start with LDO. Let's start there. I got 4 of them teed up here, all that I took from the on-chain data over here on altFINS. So let's get back over here. LDO, this doesn't look like it's quite right. This is a pattern we're seeing across all the alts. I have this same. Is it an A? A, B? Well, it would certainly fit better for the Elliottician, right? Looking for the kind of structure here that would suggest, okay, well, if I can get an ABC in here, well, I'm going to feel very, very good about buying here. I've got imbalances. I mean, I can't script this any better, right? I've got a big imbalance here, a fair value gap between the 50 and the golden zone here, all the way down to the 2 low here. There's some supply overhead, right? So you can understand, or there'd likely be some resistance, even if I got an expanded B here. The question is not, do we get a high here? The question is, do I get a 3? Do I get a 3 or a 5? That's an 8 hour. 1, 2, 3, 4. It looks like I got a 5 here in the A. So a 3 in the B. Well, okay, let's be mindful that, as we sit here looking at the algo here and the algo here, That's the 50% algo. Oh, real quickly, let me, that's on there. Oh, let me go back to a daily just to kind of make that point. So if we look at the range here, well, where have we been, right? So as we sit here, we're essentially framed by, here's a value area, high and low. So even if we do it like this, okay, a little below, a little above. Do we have a clear trend? No, that might be too much, right? So all I did was take the low here to the high here and say, okay, yeah, we got a little throw over here, but whenever we're in log scale here, we can't, I've got to do it. Just use the fib tool so I can get a true 50. As we retrace back here, we're sitting right in the middle, just below the POC. Do you have an edge? Well, the only edge you have here is that you've got a 5 leading this. So now let me go back to a 4-hour here, and we were looking at this. So 1, 2, 3, 4, 5. It's pretty imbalance between within the third, just where you would hope to see it. For the retrace it for the 2, come back. Well, you see, I've got an alert here, right? If it starts to come back here, I'm a buyer. You trade this on Coinbase for U.S. residents. Clean 5, right? Not beautiful channeling. You can't ask for it any better. It's perfect 5. Can I get a perfect 3? Well, if it gets down here and I get a little bump, I'm in. Even if you didn't get the turn, get the little micro swing, then get in. Right, a little bit lower risk, clear identification of where this trade would be wrong. Now it can go lower, and you could still end up with a C here. But But we could do this as well. So don't just go, oh fuck, let's just let it go to the golden zone here. Have a plan. If the plan is to trade off of that pivot, the assumption is that's the low. If it breaks, you don't want to go, oh well, maybe it'll go golden zone. Oh, maybe it'll go 786. Right? That's how you screw yourself. You're not willing to take the stop. It's very, very common, probably the most common error of all trading mistakes, other than maybe trading without a stop, right? If you're trading with leverage, except, I can tell you all day long, but you're going to have to experience it. It's so much better to take the small loser, even if you take the small loser and then it turns around and goes. Welcome to trading. It's going to happen. You have to be comfortable with the fact you're going to get stopped out more than not. Most of your trading career, if you went back and looked at your numbers, and I'm generalizing here, but I can just, most professional traders would concur here. Most of your revenue is going to come from maybe 10% of your trades. So it's the old cliche. We can have little winners. We can have little losers. We can have big winners. The only thing we cannot sustain is a big loser, right? And if you allow for a big loser, you are a big loser because you did it to yourself. Right? Just something I've said 1,000 times, but I remind you, if you have a plan, don't change the plan. Stick to the plan. If it comes down here, and then you go again. Oh, we get a little 5. Oh, I'll go again. Now stops under the golden zone. Now you get the 3. My suggestion would be get it on your watch list. I forgot to hit my mute button there. All I was saying was this would, I think, a green banana. Not quite ripe, but on your watch list. Let's go down to the graph, right? That was the one that was consistent through all of those on-chain metrics here. That was consistently showing up here in total revenue, market cap divided by revenue, protocol revenue. Nothing but good signs there. But how do we look here? Yeah, let's take this off. Let's just hide it for a second. Well, what can we say objectively? Break of structure. Break of structure, retrace. Break of structure, retrace. It's nothing revolutionary there. For an Elliott count here, you're kind of scratching your head. I would not try and turn that into a 5. That's just a force fit. Even if you're trying to, right? I mean, if you got a 5, 3, so what you're thinking is, well, this would be the 4, the 5, so 3, 1, 2. That doesn't work. 1, 2, 1, 2. That's again force fit. So as it sits right now, what's the possibility? Well, could we have a leading diag? Maybe. Right, now, of course, if that's the 3 and the 4 is coming down here, you know, it's not a great looking 3. We'd probably have to do something like this. Now we know, right? If it's going to hold, right? If it's going to hold here as a diag, well, we've got to sweep the 1, which we've already done. 4. Where do we look for in a diag? We want to look for the 50 from the start of the 1, which is right here where we have a demand zone here and a little order block with a fair value gap above it. So we know that's a good demand zone because it produced fair value gaps. So here's this pattern. You see this in pretty much every alt we look at. It's because it's just everywhere, right? We're looking at it going, oh, did we truncate here? Is this 1, 2, 3, 4? Oh, we got a nice 3. Oh, of course you come here. Oh, is that a 5? And this is a 3? Well, it's kind of the same old story here. Can you be certain about it? No. What's the alternative? Well, if this is A, B, oh shit, can we do it? Yeah, wait, let's just go. Let's just keep it simple. All right, if this is A, B, and that's a C, well, I got a 3, 3, 3. Well, so what's the possibility here? Well, we can just as we were looking at with LDO, right? Is this possibly a leading diag? We've already swept the 1, 3, 3, 3. Where do we look for it? Right, consistency. Where do we look for the 4 at the 50 relative to the start of the 1? That's the most. It's not that it can't go elsewhere. It's just the most common location. So wouldn't that make sense? Right, never neglect the channeling. So important. All right, so something like this. Right, we got imbalances here. Fair value gap down here. 3. I don't know. Now, keep in mind, right, always an algo on the other side. Right? It's so easy, right? You get your bull goggles on and you forget, right? Always an algo on the other side. Let's get you right on there. Was that 50,200 times I've shown that? After a while, I almost feel guilty doing it. It was like, oh God, not this again. What can I say? I don't create them. I just point them out to you. So you're at least aware of them. Oh, maybe can we get through? No. Went out for support here, right? So we're just in a little algo box. So the point being, when you're in an algo box, do you have an edge here? Maybe, right? Maybe you look at this and say, well, we just looked at it, right? Higher high, higher low, higher high. We're retrace. Here's the next break of structure up here. We're gonna have to break that for this to carry on. This would be a change of character. If we're going to break this down here, if we're going to roll over here, well, then you'd be thinking, well, perhaps WX, right? If this is ABC, we're going to go ABC lower for a 4, so WXY remains to be seen. I hate doing these videos and giving you hurry up and wait. I'm dying to give you things that are just ripe right now, but I spent 2 hours looking. I just don't see anything that's got to go right now. Let's see here. Oh, another one here that was very some nice revenue. Oh, I think it was up here. TRX here, protocol revenue, quite good, right next to ETH. Well, let's go look at it. Turn on. All right. Well, so what I see? Yeah. Well, U.S. residents, you're not going to trade on Binance. Well, maybe you're going to. I wouldn't. But you could. I think Kraken. You can trade this. Maybe Gemini, Bitstamp. It's kind of a bumpy road up here. Oh, I've got, let me get this off for a second. I've got the market structure on. This got a little weird here. It looks like you can go 1, 2, 3, 4, 5. So you get an impulse, but you'd have to do 3, 3, 5. 1, 2, 3, 4, 5. So it looks like you got an A, B, C running flat here. 3, triangle, 4, 1, 2, 3. Well, pick your 4. Last little squirt up for the 5 gives us a 3. Now here we are again. Is that 1, 2, 3, 4, 5? Right now we don't have the truncation here. So this, again, never forget. I know it's easy to forget. Always the algo on the other side. Because the people behind it don't care. They do not care which side wins, right? Because they're going to get it one way or the other. They don't care. So that's, again, I can't make this shit up, right? So boom, right? So we're coming down for the 4. Well, what would you be thinking there? Well, you'd be thinking, oh God, it wouldn't, if I'm lucky, maybe I can get that 4 there. A, B, C. And so you have the ingredients there for a sweep of this low, right? To grab some liquidity, right? We know there's under every pivot, we know there's liquidity. Period. Period. You don't have to wonder about it. Geez, I wonder if there's any liquidity, and always going to be there. Where can they refuel here? Right here would be in line with expectations for an Elliott count. This channeling the measured move algo here. So you want to buy that there? Well, okay. So what would your rationale be? Oh, that this is here's what you'd have. How would you do that? Okay, let's not be overly bearish. Let's say, okay, is there a count here that would work? This would be an alternate. It would not be my primary, but okay, 3, 4. Okay, maybe I can get that. That's a daily. Let's go to an 8. Maybe we can make that make sense. A, B, C. Well, what do we have here? 1, 2. Let's get in there, right? So if you're just jonesing to get long, I'm not saying that this is the right time. I'm just pointing out the technicals, right? So it looks like we're to and through, right? We already lost. We lost the buy side algo. We have the sell side still in effect, right? That still right there. That's to the tick, right? So we come here. Oh, we lose him, right? We lose him. So bear's fully in charge. Well, here's the target, right? This algo is going to stay short till it gets there. So ABC 1, 2. I sure it's really nice to have, right? So you're fighting that algo with the target down here. So your assumption is that this is the low. This is a good 5, which is. You sure about that? Let's go to a 4. Doesn't look like much, if you're really, if you really are just blinded by bullish enthusiasm. 1, 2, 3, 4, 1, 2, 3, 4. You're force fitting. Period. Why? Because you're dying to buy it? Because you don't want. Well, if you're dying to buy it, why? Well, you FOMO. Right? That's the only reason you'd want to buy it here, as I can think of. What? Why? Well, now maybe if you held the algo here, you could make a case that the algo is going to kick here, and I have a target up here. Other than that, that's just hopium. I'm buying it because I'm bullish. Okay, well, it's okay to be bullish. It's good to be bullish, right? They're making money over here, right? We just looked at why. That's the reason we're looking here, right? To be bullish, but let's not be foolish. Let's not be foolishly bullish, if that's such a thing. Wouldn't you? I mean, if you're a bull, right? If you get the opportunity to buy it down here, don't you like it better? Well, you say, yeah, but I don't think it's going down there. I think it's going to the moon here. Okay, well, if so, first let it prove it. You got to break that, right? That's the resistance, and then you got an order block up here. Okay, well, you're convinced that that's going to happen. I don't understand your thinking there. Trust me, I want it to go. I want to give you bullish setups here. That's not one I would take, for what that's worth. Now, get this. Yeah, I'll take that. I understand that. I know where I am here. I wouldn't, or shit, you could do it that way. Here, you could do it WXY. All right, we do it that way. Assuming this turns into, something like this. Well, so we'd have an ABC, right? That's all you're looking for. Do I get a 3 here? If it's ABC, a X into the golden zone, A, right? Maybe that's an A. Sure doesn't look like a 3, but maybe, right? A, B, C. Okay, I got a 4. Now, that I would take. Just don't rush. Markets aren't going anywhere. You're not going to miss anything. If you do, you'll wait for the retrace. It's just that simple. Rarely are you going to miss something that's gone so far, so fast that you won't get a retrace to get in. I mean, it happens. I'm not saying it doesn't happen. I'm just saying evaluate the risk reward. Another one. We looked at these. This here, last one here. Oh shit, I'm gonna be still 30 minutes. 1 inch, right? I try and make them shorter. It's very hard for me to do it. I guess I'm an over talker. Okay, let's pull back. That's a 3-day. I had to pull back way out on this. 1 inch. Do I need to say anything there? Swing low, dominant, right? Runs into the imbalance. What do we retrace to? Golden zone. Well, okay, let's dig in there. What do we got? 1 A, B, C, maybe. Let's give it our most generous outlook. Right? A, B, 1, 2, 3, 4, 5. 2, maybe. Okay, we got it here. Looks like you might. Okay, so looks like you might have a 1, 2, 1, 2, 3, 4. Looks like you might have a 3, 4, 5. Let me change that degree in that color. So shit. Here, let's go to green. Okay. Do I have to say something? Is anybody surprised by that? One to the next. All right, that's what the market does over and over and over and over and over again. Right? So that's just, I don't know, I feel like, oh Jesus, not again. What? How can I not show that to you? Well, probably bigger question is, how could anyone, I've said this many times, that watches any of my videos, how could that not be the first thing you do? It can't be. Well, not the first, the second, right? You got to know where it is, right? Or you'll buy it. I guarantee you somebody bought, well, I don't even have to say it that way. Obviously, somebody bought it, right? So if there's a trade took place, there's a buyer and there's a seller, somebody bought it right there. Do you think they knew they were buying into the golden zone? Or were they just going, oh, even if they did know, maybe they knew there was a 618 there. Did they know about the 65? Maybe not. Well, everybody knows about the 618. Here, that's to the tick 618. Here, into the golden zone. 4, right? It has to break. One of these is going to break. Has to, right? Or we go sideways forever, right? So just because I'm showing them to you here and often, right, I can show it to you where we've done broken, we're stuck in a box. One side's going to break, right? Or we go sideways forever. But do you want to, you kind of want to here's what you don't want to ever do is buy right into that, right? Sometimes it'll go through, of course, right? Of course it will. But is that the trade you want to take? Well, I know it's going to go through, right? That's a dangerous assumption to make. Most times, at the very least, you'll get a reaction because it's just software sitting there. Right? It's gonna react. Doesn't mean you can't get through, but you're gonna get a reaction just as you got here. So this might be just a little kick, right? So the algo fires here, and we kick back a little bit. Now that doesn't mean we can't get through, but let it get through before you start thinking, oh shit, it's time to buy. Let it get through. So then okay, is that the 3? Maybe, might be 1, 2, 3, 4. It's good. Got below. Yeah, that's a good looking 3, OBV, right? Buyers coming in. Oh, that's the CCI. Got a little bit hot. Well, let's see. Let's go to an hourly. Wouldn't you like it a little bit better down lower if you're a bull? Let's see. 1, 2, 3, 4, 5. There's a good looking 3. Is that? Oh shit. Let's get in there. A, B coming down for the C. That's tricky. That could be here. And this is just the A. Well, yeah, all the more why, okay. Dicey, right? So is it just the straight shot or is it 1, 2, 3, 4, 5? No, almost no way to tell. Right? What we can see is we can understand why it stops there. Right? It's always a question I always ask, right? Why does it stop there? Why there and not anywhere else? We know why. I like this one. I've got a piece of this. Love it down here. We got nice channeling, right? Don't forget the channeling. So critical. Can we get the 4 there? All right, so where would we be looking? Damn it, come here. Let's get our wave 4 on there. I don't really want my wave 4s going below the 50, right? I lose conviction in it. I want them to hold here between a 23 and a 50, right? That's the high probability location. That's where I know I'm likely to get a better looking 5. I'm just trying to get to the 3. Right? 1, 2, is this going to be my 3? Or is this going to be 1, 2, 1 of 3? Too soon to tell. That's a high class problem, but do you want to buy it right there? Off of that? Wouldn't you want to give that a little more time to balance out? Maybe a little more like that. Bring it over. Bring it over. And that could fatten up a little bit. This would be ideal. You don't have to sit here with a limit order, right? Wait for the reaction. See how we react. But there's reasons for the algo to pull down lower to rebalance that fair value gap there. You've rebalanced here already, so if it's going lower right here, it could go. Often you'll see them go right to the edge of it, and then they'll pop. That's what I'd be watching for. All right, so nice. Just here, I'd love to be giving you right now. Buy it now. You're going to be in great shape. But a lot of times, right? Because it's I do these on Friday. No telling what the market's doing on these days, right? It's just a snapshot in time. Right now, per the things we've looked at, the snapshot. I think we can see where we are, but things change fast, right? Change happens fast. But certainly what you'll see, I hope that what you take from this is the consistency of our methodology, right? It's the same way every time. Every video, 5 years, I've been doing this for a long time. Every video you've ever seen is always approached the same way, right? Now, over time, what we've added is the market structure because it's so popular. And 2, it fits in with Elliott Wave. I mean, you can't do one without the other. Well, pardon me, I shouldn't say that. You can't do Elliott Wave without market structure, but you can do market structure and not include Elliott Wave. But if you're using Elliott Wave, as I've said many times, Elliott Wave is the OG of market structure. Right? This is nice little service here. Recommend that highly. If you want to save a little dough and you want to learn this methodology and have it pumped into your brain so that, I can't look at a chart and not see 5s and 3s. But again, a lot of practice. Okay, guys, with that, I wish you a good weekend, and we'll catch you next week at the live stream. Okay, take it easy.